All right, so hopefully you read the text above about what liquidity is. And now I'll fully be able to go in depth from when I was talking about order blocks. I really couldn't say much because it more so had to do with liquidity as well. So this is the video to watch right here. Okay, liquidity. We all know what liquidity is. If you see these wicks, it's going to be a lot of drawing in this video. If you see these wicks, this is all liquidity. The market hitting liquidity, 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 liquidity. And you're probably like, what is liquidity? Liquidity basically is wherever the money is stored. Like, where's the money at? I'll get you a better example. The liquidity isn't nothing but the market snatching where the money is to either proceed higher or lower. It's as easy as that. Like this right here. Like this double bottom. With this double bottom, your liquidity, you are liquidity. Look, this is basically what happened, okay? You had a double top, right? Which was liquidity. As you can see, the market was consolidating over here. It was able to break out, hit liquidity right here, which I mean, somewhere previously back here, this must have been the area where this was liquidity. So liquidity grab, 3 strong bullish candles, pushing up to grab even more liquidity, comes down, stops out people who was in for buys if they expecting the market come up, stops them out, pushes back up, grabs even more money, then finally breaks, comes down. This liquidity, a double bottom. After that double bottom and that neckline broke, instead of this candle right here is liquidity. This whole move is liquidity. Every time you get into a double top or double bottom, once it breaks the neckline or that line of support, you want to call it, you are considered liquidity. So after you get that strong bullish or bearish move, you instantly want to get out of the trade. If I was trading this, right here, okay, I'm getting in for buys. Dude, I'm getting out right here. I'm getting out basically roughly because of what this candle is right here, what this candle wicked right here. That's where I'm getting out at. Not taking no chances. And that's the reason. Stop off big as fuck. That's what I'm getting out. 49ers. Yeah, that's unrealistic. We know the stop loss ain't that big. But that's basically where I'm getting out. Right here. This next level of resistance. And as I told you, the market uses the same support and resistance over and over again. So what happened was once it broke that neckline of support, if I drag this over, this is now resistance. Since the market reject right here, and this was a level of support, the market obviously knows that there are stop losses and there's some money to be grabbed right here still. So what does the market do? It manipulates. People think it's going to break out. No, it doesn't. The market just grab more money to continue back downward. Grabs more money, grabs more money. Okay, cool. Remember, this was your level of support. What's the market doing? Grabbing money, stopping out everyone right here to push lower. This would be a definition of an order block right here. Look at that. Look how big the wick is. Instant reversal. Okay, his order block reverses. Imagine if you got in for a buy because you think it's a buy. No, my man. That is a order block being fulfilled. Once you see that, you should instantly sell. Look how low it fell. 162 pips. And it fell after it hit that order block. It fell right back to liquidity. How's it liquidity? Look at these 3 moves. Anytime it hits liquidity, you get a strong bullish or bearish move every time. So look, Liquidity. How I know it's liquidity? After it hit here, what happened? People bought, made like 55 pips. People bought here again. Would have held all the way. Would have made 142 pips. People bought again. Would have got out 84 pips. This is all liquidity. Hits an area where the market grabs, where the market knows where the money is to continue to push the market more up, and bam, simple as that. That's all you need is market. You need price action. If you can read price action, you will never need an indicator ever, ever. I mean, you can use EMAs, you know, but you can read this stuff like head and shoulders, double tops, double bottoms. Those are nothing but liquidity moves, liquidity reversal patterns. That's all they are. You have to understand, once you trade in a double top, a double bottom, a head and shoulder, rising wedge, falling wedge, once it breaks, you are liquidity. So that means once you see any kind of reversal, you instantly want to get out. That's how you want to trade those. You are liquidity. We go right here. More liquidity. All right here. Liquidity. The market knows what it's doing. See how, look how it's stopping people up. People think it sells. Nope. This was an order block that was hit. And the rest of this was liquidity. Like I told you, every time it is liquidity, the market reverses hard. It's manipulation. Reverses hard. Look at that. Fell down. 66 pips. Catch that order block straight off the move. 53 pips. Straight off the move, straight back to the top. Then reverses again. Look, market grab liquidity pushes, forces it back down. Looking for even more buys. 77 pips. Right here. 37 pips. Like, the market is basically telling you what it's going to do with that liquidity. You can almost predict the majority of the time on what it's going to do. So think about it. 1, 2, 3, 4, 5, 6 winning trades. My fault. 7. Because right here. Would have got out down here. So 1, 2, 3, 4, 5, 6, 7. Those are 7 trades. And some people be like, oh, it's consolidating. Oh, it's ranging. No, you should be able to check the area to see if there's liquidity. If this is liquidity or not. This is all liquidity. These are order blocks. This was an order block down here. No, those order block. This whole area right here is an order block. Hit it. Market manipulated. Oh, you think it's a sell? Nope, it's a buy. What does it do? The market goes up and up, and even went even higher. So this is the video y'all was looking for right here. For liquidity, this is all it is. If you can spot liquidity, if you can know the difference between an order block and liquidity, order block instantly, once the order block is hit, it reverses, like instantly. Like this right here, this would be considered an order block. Like as soon as the market hit that order, reversed. So imagine if you thought it was a buy. When you first started, you thought it was a buy. No, this was a sell. You instantly just sell this off. That's like almost 50 pips instantly. Like these are the plays that you want. Okay. These are the plays that you want. You want those every time. So yes, once you master liquidity and order blocks and price action, know what you're looking at without having to use any type of indicators, then that's when you're truly gonna see some success. Because if you keep relying on these indicators to make your money, I mean, it's not gonna happen. Yes, you're gonna lose. You're not always gonna win, but you have a high probability of winning every single time, strictly off of price action and knowing exactly what you're looking at. So this is a video on liquidity, and I hope this helped.